Hello everybody, this is AK. I'm back. So hope everyone's happy with how general election 2025 went. Well, it's over for another 5 years, right? And let's all cross fingers and hope for the best. You know what, with all the crazy tariffs from Donald Trump still in the air, we don't know how things are going to turn out, but I think Singapore will be okay, right? With our reserves and our prudent policies in place, I think we should be okay, right? I hope things are okay. I still can't take my CPF money out yet. Yeah, let's hope things will turn out okay. Anyway, right. So after yesterday's video, I was looking at the stocks in my portfolio again, and I was looking at their prices now and which one look more interesting. I've not been able to look very closely in recent weeks because of all the things that's happening at home, but this weekend I have some time. And two other stocks which are looking interesting to me now, which are in my portfolio, are Wilmar International and iGlobal. Right, Wilmar International is close to my last purchase price of $3 per share again. Right, and if you have been following my blog for a long time, you know that I'm always looking to add at what the insiders think is a good price, right? And usually at about $3 or under $3 per share, slightly under $3 per share, we see insiders buying, right? And obviously they think that undervalues Wilmar International. And when the share price was coming down several months ago, you know, from three something down to 320 or 310, people were already buying and asking me whether I was adding. I said nope, I wasn't adding. I was still waiting for $3. And then someone told me, yeah, $3.10 very cheap already lah. Right, but I was quite adamant about waiting for $3. It's not something that I die must increase exposure to. I mean, I like buying things which are undervalued, but we must remember that undervalued can stay undervalued for a long time, right? And if I get more at the price I want, fine. If I don't, then that's okay too, right? Wilmar is more like a steady dividend payer in recent years, right? And this is consistent with what Mr. Kwok said before. You know, there will come a time when Wilmar sees his businesses mature and he doesn't have to plow in so much money into capex, and it will start paying out more consistent and more meaningful dividends, and we're seeing that, right? So it's a consistent dividend payer, but unfortunately it is also pretty cyclical, right? And so there's no need to rush to buy at higher prices, right? So there will always come downturns when we can buy at lower prices, right? And Wilmar is very undervalued at $3 per share. I mean, at the current price, it's also undervalued, but like I said, I'm always waiting at $3 per share. That's where a strong support is. To put it quite simply, in a nutshell, you know, if we pay $3 per share, we're basically paying for Wilmar's subsidiary in China, and everything else that Wilmar has, we get for free, right? More or less is like accounting. So, you know, if you look at the sum of its parts, Wilmar is worth a lot more than $3 per share, right? So I like investing in Wilmar at $3 per share because it undervalues the company, and well, all investments are good investments at the right price, and I think $3 is a right price for me anyway, right? So the next one is iGlobal, which is also beginning to look interesting. I mean, I think it went down like 23 cents per share, and over the last 2 years I kept saying that I wasn't adding, I was waiting because the Berlin property is being repositioned. Right? I mean, it's been confirmed. You know, we've known this for more than a year, right? And basically, it means that we won't be seeing any income from its Berlin property for about 2 years. Previously, I thought it was 1.5 years, but now it has been revealed that it's going to take about 2 years to refurbish or redevelop that property. So we are not going to see any income from that property, and that property accounted for like 25% of iREIT's income, right? So without any income from that property for the next couple of years, we'll see DPU coming down by at least 25% or maybe more, because they need to borrow money to refurbish their property, right? Apparently, there's not going to be any rights issue or share placements. They're going to borrow money to refurbish that property. And iREIT has currently a very low gearing level, right? So it's like under 40%. If I'm not mistaken, it's about 37%. So it has that headroom to borrow against in order to refurbish that property without having to come to shareholders for more money. And already they have signed 2 long-term leases with 2 hospitality operators who will take up about 1/4 of the property's floor space, and that 1/4 of floor space is already going to generate about 50% of the income of the tenant that vacated the property. So like I've said, you know, that property was severely under rented, and they could easily command 100% higher rent, all right, once that property is completely refurbished, once it's up and running, back in operation. So at the current price of 23 cents per share, the market is undervaluing iREIT Global, right? But if we are focused on the income and we still want the same distribution yield like what we were getting before the Berlin property was vacated, if we want the same distribution yield in the next 2 years, then we would only be buyers if the share price comes down by another 20-25%, right? Which means that and when I talk about this, at the time the share price was about 25 or 26 cents, if I remember correctly. So basically I was waiting for the share price to come down to about 20 cents per share before I buy more, right? And that's still the plan. If the share price comes down from 23 cents, it comes down to 20 cents per share, I'll buy more, because then what happens is I'm going to get the same high yield as before the Berlin property was vacated. And once the Berlin property is refurbished and 2 years later is fully operational, the yield will be even higher. You'll be probably in excess of 10%, right? And that to me will be a steal. The danger now is that the sponsors might privatize iREIT Global. If the share price ever drops to 20 cents, they say, oh, that's too cheap, and they might privatize it. So that is something that could happen, but obviously, if I can see value at 20 cents per share, the sponsors, both of the sponsors can see value there as well. Is be super undervalued, right? So these are 2 counters which I'm looking at possibly adding: Wilmar at $3 per share and iREIT Global at 20 cents per share. All investments are good investments at the right price, but remember, undervalued can stay undervalued for a long time. So even if the ideas seem interesting to you, and if you do not have the holding power, I'll say don't invest in these 2 counters. Right, I know these 2 counters probably a bit better, and I'm quite comfortable being invested in them. And I'm also quite comfortable in adding at the prices that I've identified. In the meantime, it's okay. I'll just leave my money in the T-bills. I still have my T-bill ladder, and I mean the yield has come down, but it's a very safe place to park my money. There's no price risk. Right, there's no price risk, there's no volatility. 10,000 is 10,000, 100,000 is 100,000. I just take a small income, interest income, the coupon every 6 months, right? And because I have a ladder, it means every 2 weeks I have some pocket money coming in. It's not a bad place to park my money, right? I don't have to optimize or maximize returns on my war chest, right? But I have been dismantling the ladder a bit, right? Just a bit, because I've been buying shares of Alibaba, right? And I've been so dipping into the war chest. But the war chest will get replenished this quarter because the banks are all paying dividends, and usually second quarter and third quarter I get quite a lot of dividends coming in, so I should be able to replenish my war chest. If I don't buy anything else, my war chest would be topped up again. But of course, if Wilmar goes to $3, iRate goes to 20 cents, and if Alibaba goes to the prices I identified in yesterday's video, I'll be buying more, so the war chest will get drawn down again, right? So before I ramble on any further, happy Sunday. If AK can do it, so can you. Bye bye.